So as we move into it, DraftKings is another one. This stock was doing fantastic. And then what happened right here for them, sports actually got back. Everything was going well. This stock started to take off again. And boom, we're going to go out there. We're going to try to buy Entain. And that is a $20 billion purchase, about the same size as this company. And when the company trying to buy the other company about the equal size, you're going to see that stock tank. And you're seeing that. And a lot of people ask me where I thought it would go. I thought middle 40s. $44 to $46 a share. I'm not going to be surprised if it drops down to the low 40s. That's a big purchase, and we got to wait and see how that all works out too. And how's it going to be paid for? What's going to be done? How quickly are they going to have to raise more funds by selling more shares? So there's a lot of things, and that's why people are getting out of it. In the long run, that purchase makes DraftKings a global player. And so if you're a long-term holder of DraftKings, which I am, you're going to have to weather this storm, and maybe even add on to your position as you move forward to see how this goes. If you feel good about, read about the opportunity, the acquisition they're trying to do, and you're going to, first of all, wait and see if that goes through. So there's some things to look into. But I do like this. And once again, the low we saw that I did not think we'd get under 40.99. I thought we'd be, like I said, low 40s. I didn't think we'd hit the 30s again, but back in here, you can see this down here at the end. October 30th got down to 35. I did not think we'd retest that. I did think we have an opportunity to retest this depending on the deal. But this is what I'm looking at. The DraftKings is definitely a stock that has potential, and I'm looking to make sure I actually add more onto this as we get into 2022. Coinbase, this is one I absolutely love. I'm a huge bull in the crypto space. I think Coinbase is, once again, look at this. You can look at these lows they had down there at 220, and then you got 222, and then hit it down at 220, and now we're back down there again. We're back down at 225, 227. And it's going to relate, it's going to relate a lot to how the overall crypto market's doing. If you see Bitcoin, Ethereum, all of them just getting crushed, well, then it's going to drop. But I don't see that. And we see Ethereum at the time I'm making this video, I think it was around $3,000 a piece. Next one, Sofi Technologies. I like this one. So when it comes to one of the best stocks to buy now, in my opinion, looking at how low these prices are, Sofi is definitely one of them. The banking charter, I think, is going to be huge for them. Once they get that, I do expect at least a 10% pop out of this stock, but we have to wait and find out when, if, and all that good stuff for this one. And so as we move forward, you're going to see Sofi continuing to get out there, advertising, doing what it needs to do, growing the business. The revenues are moving up. If you read the numbers on this, they're crazy how quickly this is growing. And so I'm going to be patient with it. And of course, we had a couple of pops here back here in February, and then again here in June, and then it sold off again after the rising of Delta. To me, this is just a delay of this thing taking off again until we get these issues solved in DC and we see how Delta works out. Then I think you're going to see a nice climb for a lot of growth stocks. I think the value stocks are limited of how high they can go. And I think a lot of that money still wants to make money. So they're going to move back into the growth stocks, rotate back here, because these are, if you look at a lot of the growth stocks, they are back down to levels that have not been seen for a year.
Alibaba's grown 40% last year, 44.5% over the last 5 years. I went in conservative and said low, middle, high assumptions, 15, 20, 25% growth. Share change, be conservative. Profit margin, I'm conservative. I went lower, lower, lower. PE, the current PE is 28. I went to 12, 15, 18. Same with the price of free cash flow. Then I do my returns. This is my, what return do I want to make out of my investment? Okay, 15, 12 and a half, and 10. When I hit the analyze button, I tend to focus on my middle number. I want to be lower than that middle number. That's my main focus here. So I hit the analyze button. Look at this, guys. The stock's currently at 168. I mean, we're close to the low numbers, but we're definitely below the mid and high. What this means, guys, is if you buy this stock in the middle area at 168 and the middle numbers are all accurate here, you're basically buying a $300 stock for 168. You're going to make almost 15% return on your money. That's the way I'm doing it. Now, this is all based on assumptions. And if the assumptions are correct, it works out. I can change the assumptions tomorrow, right now, actually. let's say I sit there and say, hey, you know what? They're going to have better growth.
And people have been criticizing your low PE. I mean, if you put this up at a higher PE, even most of the Ys puts a little higher PE on some of these, Paul.
Well, I did put 15 for the middle tier. And people would say, oh, it's Alibaba. Don't forget, guys, as a company gets larger and larger, you cannot pay. It's harder to grow and grow, so you can't pay as big a premium. And my goal as a value investor is to be conservative in my assumptions. Now, you might sit there and say, well, 15 is too conservative. Maybe it is. But to me, for a company that's going to be $1 trillion company or more, 15 is a reasonable PE. So I'm going to stick with that.
People are also saying that this time is different. Can you show what a 20 PE would look like in that middle tier there?
In terms of value?
Yeah, I mean, because people are saying, Paul, you don't get it.
I think my PEs that I had were 15, 18, and 18 and a half, and 20.
Okay. Well, so let's see here.
See what it is.
I mean, look at this.
Screaming buy.
Yeah, screaming buy. So again, as long as you believe the numbers, so let's say, what do we have to be at? What does Alibaba have to grow to even
break even?
To even like say, Paul, you should buy it here. I mean, look at this. I even went down to 10% revenue growth over the next 7 years, and it's still in the green over here.
That's what I did yesterday. I crushed that and I crushed their profit, and it was still in the green.
So I feel okay. I'm going to keep in short term. This thing's going to go up.
Yes.
I mean, look at the last month of the stock.
And what kind of returns are you looking for there?
That was 12.5% in the middle tier.
Okay. That's what I predicted.
I mean, look at the last
10, 11, 12.
This thing was at, just in June, 3 months ago, it was at 230. Then fell all the way to 157, 155. I mean, it's just all over the board. I look at it saying, I feel like I'm buying a good company. I have puts on this company. I've bought shares. I'm very comfortable with it. I'm comfortable with it being 3% of my portfolio. I'm going to keep rolling with it.
On Seeking Alpha and Stock Cards and said, this is a stock that I want to put in front of my viewers because I think there's some potential there. And I know this stock. I know Zillow. I was a real estate agent. One of the first stocks I said I want to follow was Zillow. And I bought it cheap and it ran up. And that was because they were... I remember this statement, and it was 90% of all first showings of all houses in the United States are seen on Zillow. The chart, the TradingView chart that is here for Opendoor, and you can see that Opendoor had a real run up as it got into the iBuyer business, and how the iBuyer business became very exciting to the market in February of 2021. And then as it just collapsed, and let me give you a kind of a view as to why it collapsed, and put an overlay of Zillow in here. And you can see it tracked, Zillow was a pioneer of this. And Opendoor came in, and you can see the orange line. They kind of tracked Zillow along the way. And then back here is when Zillow came out with its earnings and said, we give up. We're getting out of the iBuyer business. We're going back to just selling leads to real estate agents where we made money. And that pulled the whole iBuyer market down. As you can see, it just came tumbling down and reached its lows in March of 2022, and now is trading over here at about $8.24 a share. So that's where it's at. Has been as high as, what is this, showing a high of 34. Luke, as he said, he believes it will come back to 20, and let's take the Zillow out of there so that we get the price. So as you can see, it got up as high as about $40 a share. Luke believes it'll come back to somewhere around 20. Obviously, there is a resistance level here around 25. I don't know that it'll get that high, but I do believe that based on what I know and what I think is happening with the Wall Street getting involved here, I think a double is very easy before the end of the year.